And of the trading week is marked by a weaker dollar across the board. At the first glance, like other instruments, oil has taken advantage of the dollar weakness and is gaining value amid a greater than expected cool down in the US inflation. At the same time, technical analysis suggests that oil prices are just bouncing from oversold territory. After all, the asset suffered heavy losses the day before. In other words, both technical and fundamental factors are the driving force behind the current growth. In addition, the US Treasury has extended a license allowing transactions related to energy for Russian banks subject to the US sanctions until 15 May 2023. This suggests that Washington has noticed warning signs of energy shortages in the United States itself. This also contributes to a rally in the oil prices. Another factor driving up the price of oil is still the news from China. The country has eased some of its strict COVID rules. This ensures better prospects for energy demand. The world's largest oil importer shortened quarantines by 2 days for close contacts of infected people and for inbound travelers, and removed the penalty for airlines for bringing in too many cases. According to the trading chart, Brent crude oil futures slowed down the pace of their downward move around the 92 mark, as was the case in October. As a result, the crude rebounded sharply and added about 4.5%, signaling short-term oversold conditions. However, this signal may be ignored by traders, given that the current upward move is speculative. In this case, Brent crude may well extend gains, heading for the 97 mark. As for the yellow metal, investors cheered at the news that inflation in the United States eased to 7.7% from 8.2%. This means the Fed may start to reduce interest rates as early as the next year. After all, the hikes were the main reason for lower gold prices. In just over a week, gold has gained more than $100 per ounce. That is, there is no doubt that the asset has entered overbought territory. A weekly increase of 5.5% is a pretty strong price change, which is a sign of overheating. Against this background, a technical pullback cannot be ruled out. As soon as the market comes down after the release of the US inflation data, gold will inevitably enter a correction and return to the level of $1,700 per ounce. Oddly enough, the ruble also reacted to the US inflation data. In after-hours trading, the US dollar fell below the level of 60 rubles. However, given that the ruble used to ignore any macroeconomic data and even major central banks' meetings, its growth was caused by something else, analysts believe. This is almost certainly due to the decision of the US Treasury Department to allow energy-related transactions with the several Russian entities to continue through May 14 next year. Moreover, this measure may be extended in the future. This is nothing more than a partial easing of the sanctions regime, which is a positive factor for the ruble. Against this background, the dollar is likely to settle below 60 rubles. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.